The topics and opinions expressed in the following show are solely those of the hosts and their guests and not those of W4CY Radio, its employees, or affiliates. We make no recommendations or endorsements for radio show programs, services, or products mentioned on air or on our web. No liability, explicit or implied, shall be extended to W4CY Radio or its employees or affiliates. Any questions or comments should be directed to those show hosts. Thank you for choosing W4CY Radio.
Welcome to the Ask Good Questions podcast, broadcasting live every Wednesday, 6 p.m. Eastern Time on W4CY Radio at W4CY.com. This week and every week, we will reach for a higher purpose in money and life, as well as a focus on health and wellness. Now, let's join your host, Bonita Bell Anderson, as together we start with Asking Good Questions.
Hello and welcome to the Ask Good Questions podcast. Today we are starting a three-part series on Social Security. Today is going to be all about what's new with Social Security and what's been going on lately. The next one will be for a senior, basically for a senior couple. And then the last one will be for women in particular. My plan is for these to be the first Wednesday of the next 3 months. But that won't matter if you're looking at this later or watching the recording. And so let's get started. I do have some slides. So, all right, I'm going to be taking you through a bunch of stuff about what in the world is going on with Social Security right now. I'm sure you've been seeing the news. And especially, though, what this means for you. So here's the topics we're going to be touching on. Social Security paid a 2.5% cost of living increase. For those of you already on Social Security, you know this. We're going to talk about how the COLA is, how it is determined, put it into context, and see what it means for your Social Security benefits going forward. Another number affected by the cost of living adjustment is the earnings test threshold. We're going to talk about how much you can earn in 2025 without having benefits withheld if you claim Social Security before full retirement age. I have been teaching Social Security classes for many years, and I am going to show you in many, many different ways why you should wait, all right? But we're going to talk about taxes, and that may be the thing that you know most about or most aware of, because you've seen about the tax bill that just happened at the beginning of July in 2025. For those of you on Medicare, we're going to go over the Part B premium for 2025 and see how it's not just such a straightforward number anymore. We'll also cover dates for 2025 and 2026. We're going to give you an update on the status of the Social Security Trust Fund, which you may have seen several things on the internet about. And we're going to discuss some ideas for reforming the system to make it more solvent for the future. And we're going to give you an update about Social Security claiming strategies. And finally, there's brand new legislation that has taken away the windfall elimination provision, basically things that had to do with government workers and some teachers. And those provisions have gone away. So, and I will remind this about the reason that you're seeing my email for you is I'm offering you a complimentary analysis of when you should take Social Security. There is a small charge for a professional evaluation, but the PDF report for you is complimentary. So I will remind you a couple of times, but I thought the easiest way to do that is if you have questions or you want to further explore what this means for you, you can email me at my email address that you see. Okay. So we're going to start with the cost of living adjustment. All right. So that went up 2.5% in 2025. Social Security is a inflation adjusted benefit that you have. And this number is the most eagerly awaited number every October when the Social Security Administration figures out what they're going to do for the new year. And another number is the new earnings test threshold. What is the income level where you're still charged Social Security, and that is sent to the government. All right. And then the higher Social Security wage base. We're going to talk about that. I'm going to tell you again and again and again, do not take Social Security and still be working while you are still under your full retirement age. I'm going to show you what that means. All right. So let's look at what this means. So like for a $2,000 benefit, if you had a $2,000 benefit this year, then a 2.5% cost of living increase means it added $50 to your benefit. So you'd now be receiving $2,050. Now, what I'm going to tell you is, again and again, I'm going to tell you many times that if you're working and you're taking Social Security and maybe you're taking money out of an IRA, you have a lot of different ways that you could be getting taxed. So we're going to discuss this and see if I can sway you to my way of thinking. Here's a little bit of perspective about where this has been. You can see that over the years, it changes every single year. 2010, 2011, there wasn't any adjustment. 2016, there wasn't any adjustment. There was a stupid little adjustment in 2017. But then look at 22 and 23, massive, big adjustments. And so here we are at 2.5 this year. So how this is calculated is it's based on something called the Consumer Price Index for all urban wage earners. That's what that means. And it measures the change in a basket of goods and services that a typical urban worker might buy. So it covers food, transportation, housing, entertainment, healthcare, and pretty much everything people spend money on. So this is announced, this COLA is announced every October and takes effect with the checks you receive the following January, right? And if you haven't started Social Security yet, be aware that that cost of living adjustment is added to whatever your benefit was before the calculation for your benefit, all right? And so your benefit will be raised by that cost of living increase, and every year it would go up. So there's something also that you need to be aware of, and that's called an earnings test. So you're working in a job, right? And so for 2025, that also is affected by the cost of living increase. As you probably know, if you are under full retirement age and you work and receive Social Security benefits, part of your benefit will be withheld, right? So $1 in benefits for every $2 earned over $23,400, right? That is the threshold. And if you're receiving benefits, the year that you turn your full retirement, say if you're turning 67 this year, then you're working and you're receiving Social Security, then it would be $1 for every $3 earned over $62,160. So this new higher threshold comes into play if you're receiving Social Security last year and you turn full retirement age in 2025. In the months leading up to your full retirement age month, so say you have a birthday in September and you'll be 67 in September, then that 1 and 3 will be calculated on whatever you're receiving in Social Security up until that birthday month. Then there won't be any more deduction. However, Social Security, your work income, any IRA distributions that you're having, all of those are going to be calculated for taxes. And trust me, I'm going to be getting into taxes a little bit later. So while we're on the earnings test, I'd like to take a moment to explain the monthly earnings test. Yes, there is something called a monthly earnings test. That comes into play the first year that you apply for Social Security benefits. So let's say you're under full retirement age, say you're under 67, and you file for Social Security this year and you continue to work. Bad idea, but let's say you do that. If you earn more than $1,950 in any month, your benefit will be withheld. Okay? Then next year, you'll be subject to the regular earnings test, the $23,400 adjusted for next year's COLA. So not only are you getting penalized because you are taking it early, but now because you're under 67, so it's just a bad idea all the way around. I'm going to try to convince you that. Generally, my recommendation is to wait until you stop working to apply for Social Security, so you don't have to deal with the earnings test. But there may be exceptions. I get that. And we can certainly discuss your individual circumstances. If you contact me, you've got my email address there. All right. So moving on, payroll taxes in 2025. They didn't really, the taxable earnings went up to $176,100. So if your income is $170,000, then Social Security would be taking out up to that $170,000 number, and then no more Social Security taxes would be taken out. All right. So let me see. I'm going to get to the next slide here. Nothing changed with the bill that just happened. The tax rate remains 6.2% each for employee and employer. So if you're self-employed, it's 12.4% for self-employed people. And there wasn't any change for Medicare taxes, 1.45%. That also did not change. So, but the maximum Social Security tax, the amount that's taken out of your paycheck for Social Security is going to be at that threshold of $176,100. I'm going to have something to say about that a little bit later when we talk about the future. So let's say an example of the bill that just happened, right? You all probably are very aware on July 4th that President Trump signed in a new bill into law. It does not eliminate taxes on Social Security benefits. It just seems that way. All right. So basically, a quick example to help you is, let's say there's a married couple. They're both age 65 plus, and they are under the $150,000 income limit. So in order to get this deduction, you have to be under $150,000 in income. The maximum total standard deduction is now $46,700. How in the world did we get there? There's a base standard deduction of $31,500. So this is for doing your taxes, right? There's a base standard deduction. Then there's a senior extra deduction of $3,200. Plus now there's a bonus deduction of $12,000 for $6,000 for the husband, $6,000 for the wife. This deduction, the way it's just been written into law, is available whether a taxpayer takes the standard deduction or itemizes their deductions. This is, it's a good thing to probably think that it could possibly eliminate the taxes on Social Security benefits for the vast majority of seniors during these years. This is only 2025 to 2028. We're going to see what happens in 28, huh? So talk to your accountant, talk to your CPA, see how this might affect you personally. All right. So taxation of senior, so basically what I'm saying is your Social Security benefit is still going to be factored in. And if you notice, really most married filing jointly couples with provisional income of over 44,000, you're going to be paying taxes, or now what we should say is tax would be figured on up to 85% of the total benefit that you and your spouse receive. If you're married filing separately and living with a spouse, it's 85%. And really singles, it's even worse for them. Over 34,000 in income, it's going to be up to 85%. So just realize Social Security is still being figured into how much income you have, right? And then there's another aspect that is required minimum distributions. That now starts at, it wasn't legal or not, it was signed into law this year that it's age 73. You don't have to worry about this until you're age 73. There is a new IRS life expectancy table that allows you to take a little bit less. And just realize that between, if you're working still, and the reason I know this is because my husband, a retired pharmacist, he worked until he was 75. And he had RMDs, and he had Social Security, and he had his work income. So RMDs and all these other kinds of income can bump you into a higher tax bracket. Just realize that that is possible to happen. So one of the things that you can do to head off taxes on Social Security benefits is convert to a Roth. If you have IRA money, consider taking at least a portion of it and converting it to a Roth. You will pay taxes now on that distribution, but then once it's in a Roth and you take a Roth for income later on, there's no taxes then when it comes out. So I'm going to tell you again and again and again also to delay Social Security. You're going to reduce the number of years your income is subject to tax. Okay. So that is something that I've just seen again and again and again. All right. We're going to talk about Medicare a little bit. So I keep telling people, you know what, just figure that we're going to be paying $200 a month for Part B premium before we know it. And it's now $185 a month. Last year, if you're curious, last year it was $174.70. So that's why I'm saying don't be surprised if you see $200 a month for Part B premiums sometime soon. So if you are on Social Security, this hold harmless provision, I'm not going to spend a lot of time on it, but it does apply when it doesn't cover the increase in the Part B premium. And it didn't apply this year. Social Security's COLA was 2.5, but a lot of times that cost of living increase that you get your Social Security, it doesn't cover your Medicare premium going up, because this year the Medicare premium went up by 5.9%. That's just the way it works. So there's also something for people that are blessed with higher income. You may be paying more in your Part B premiums based on your income. So you can appeal if the income has changed due to a life-changing event such as retirement. And unusual capital gains is not grounds for an appeal. But let me give you an example. You may not be able to see this, but over on the left is the income levels. And most people, like for a joint couple, up to $212,000 in income, you're going to pay $185 a month on Part B premium. Now, the Part B premium also comes out of your Social Security if you're taking Social Security. If you are 65, but you are going to intelligently wait until age 70 to take Social Security, but you're starting Medicare at age 65, then that Part B premium is just taken out of your checking account. You know, you just do an automatic deduction for the health insurance premium. But that's $185. But you can see on the right-hand side is the Part B, B and D premiums, the Part B and the Part D is prescription. It can go up significantly, but like for a 334,000 income level, you'd be paying $405 a month, right? So just be aware that that can happen for higher wage earners. So here's some dates to watch. I'm going to talk to you first about next year. If you are already in a Medicare Advantage plan and you're not liking it, you can, first of all, you could make a change in the fall when the open enrollment is, but January 31st, this is just to let you know, January 31st to May 31st is called the disenrollment period. You can switch, or maybe something changes. You can switch from a Medicare Advantage plan to original Medicare. Make sure that you can get a supplemental policy, because sometimes you may be subject to underwriting. And so sometimes people miss the Medicare general enrollment period. So if you miss the initial or a special enrollment period, maybe because you were retiring, you can enroll in Medicare now. So coverage starts the month after the enrollment, okay? So then most people are going to be interested in this, the October 15th to December 7th annual open enrollment period. You can switch Medicare Advantage plans. If you have original Medicare, you can switch drug plans. And just be aware that these plans change every year in a lot of cases. So if you have health issues and you drop your Medicare Advantage plan, you may not be able to get a Medigap policy. So be sure to get that lined up first if you're thinking about dropping Medicare Advantage plans or doing something different. All right. Are you wondering what's going to happen with Social Security in the future? Are you wondering if it's going to be there? Yes. I'm a financial advisor, and of course, this is my opinion, but yes, I believe it is going to be there. And I'm going to explain why. So, Social Security was basically designed as a pay-as-you-go system. Payroll taxes from current workers go into a trust fund and are immediately paid out to current retirees, right? Because baby boomers have been in their peak earning years, the trust fund has accumulated more than needed for current benefits. Right now, the trust fund holds about $2.7 trillion. That was actually as of about 6 months ago, which is invested in special issue Treasury securities. As baby boomers start retiring, these trust fund assets will gradually be drawn down, right? So that's what you may have heard about in the past. So this might be hard to see, but it's a graph that shows how over the next 75 years, costs will begin to exceed income. There are enough reserves that the system will be able to pay 100% of promised benefits until 2034. That's really not that far off from us now, is it? After that, if nothing is done, and that's the operative word, if nothing is done to reform the system, income will be sufficient to cover about 81% of promised benefits. So I have been clamoring at Congress people forever, but let's talk about what it would take to restore solvency to the system. It's not in imminent danger, but most people agree that the earlier reforms are instituted, the less painful that they'll be on everyone. It's really just a math problem, right? That involves an increase in revenue, a cut in benefits, or a combination of the two, right? Here's a few of the ideas that have been proposed. I don't know, I think there's about 12 or 13 ideas on the table, but I don't know if anybody's doing anything about them. One is to increase the maximum earnings subject to Social Security tax. I have talked about this in my workshops that I've done over the years for a long time. Currently, $176,100 in earnings is subject to the 6.2% tax paid by you and by your employer. One way to shore up the system is to raise the earnings cap or eliminate it altogether. So another reform proposal calls for raising the full retirement age, another thing I've guessed could possibly happen. Currently, full retirement age is really, for most of the people looking at Social Security now, it's 67. That would be for people born in 1960 or later. An argument in favor of raising the retirement age is that people are living longer. An argument against it is that people whose occupations involve hard physical labor really can't work until age 70. Still, another reform proposal would change the benefit formula so that future increases would happen at a slower pace. So that would affect the benefits of future retirees, right? And some are talking about changing the formula for cost of living increases. This could give retirees a smaller benefit increase going forward, although the changes are expected to be minimal. So that's a lot to digest. So the question is Congress going to do anything about this? Given that there are lots of ways the Social Security system could be reformed, is Congress likely to address it this year? I don't think so. Other issues are taking priority, and because of that $2.7 trillion trust fund, benefits are not in immediate danger, right? So the last time Congress made major changes to the Social Security system was 1983. And guess what? At that time, the trust fund was within a few months of running out of money. I hope they don't wait. I hope they don't wait like that. But theoretically, Congress has until 2035 before they have to worry about that happening, right? We'll see. Send a letter to your congressman, okay? So here's some claiming strategies. There's a couple that have just gone away, so I'm not even dealing with that. The most important one for you is lower earning spouses. Now, it's still possible for a lower earning spouse to receive 50% of the higher earning spouse's PIA. What's that? Primary insurance amount. And so that would mean the lower earning spouse would have to be less than 50% of the higher earning spouse's benefit. So if she is claiming before her full retirement age, don't do that. But if she is, the benefit will be less than 50%. If she's going to get deducted on that. I am happy to run a spousal planning analysis for you to show you when would be the best time for each of you to claim your respective benefits. So please email me to talk about the specifics. I need a couple of pieces of information for you, and I can run that benefit for you. All right, benefit analysis. So this that we talked about, this windfall elimination provision was basically repealed. It had to do with government workers, and it had to do with some teachers. And so I'm not going to spend a lot of time on that. But basically, that kind of takes care of what's new with Social Security. And I'd like to offer you a Social Security checkup in the form of an analysis. This goes into, actually, the computer runs thousands of different ways this could happen for you. But we found that sometimes people miss out on benefits just because they basically have no idea. They don't know they can claim them. Here's some examples for you. This is an example of a married person who never added on her spousal benefit after her husband filed for his benefit. Guess what? Social Security is not going to come after you saying, hey, you're missing a benefit. No, they're not going to do that. So So if she has been earning her benefit, if she had started her benefit and then her husband had waited, thankfully, and he now has his benefit going, she's going to have to call Social Security and say, hey, I think I'm due a spousal benefit on his income. So she has to apply for the spousal benefit, which she didn't know to do. So our analysis reveals things like that. Here's another one. How about a divorced person who didn't know she could claim a benefit off her ex-spouse, right? So now, not everyone can do this because your own benefit, if you've been working, your benefit may be higher than your spouse's or your ex-spouse's. But it's always good to check. And our analysis can help divorced people find out if they're receiving all the benefits that they are entitled to, right? Okay. Here's another example. A divorced person whose ex-spouse is now deceased, making her eligible for a survivor benefit that is higher than her own benefit, right? Well, if they were married for over 10 years and she may be able to get a survivor benefit based on that ex-spouse's earning record, which is higher than her own, right? So her spousal benefit needs to be less than 50% of his. But again, if this is your situation, we can run an analysis for you to figure out if you've been missing something. So we can look at possible benefits. We can explore claiming strategies. We can see how Social Security fits into the rest of your retirement income plan, which is super critical. And that Social Security analysis is complimentary. I will, you contact me, you email me to set up the what we need for getting that, and I will email you the PDF analysis. If you would like a professional evaluation, if it's just, pretty confusing, then there is a small cost for that. But we can discuss that when we chat. So thank you so much for joining me today. I hope this helps give you a little bit of an idea, or maybe calm your fears that Social Security is going away. Like sometimes you see all kinds of crazy things on the internet. So it is not going away. It could change, but it is not going away. Thank you today for joining us for what's new with Social Security on the Ask Good Questions podcast.
Today's episode is over, but we did ask good questions again, didn't we? Don't miss out as we broadcast live every Wednesday, 6 p.m. Eastern Time on W4CY Radio at W4CY.com. Join Bonita Bell Anderson next week for more conversations with experts on finances, retirement, behavioral finance issues, health and wellness, and more. Until then, remember to ask good questions.